This month has been very exciting for the Fivers account. We've increased the value of our account by a total of, wait for it, 19 cents. That's right, 19 cents. And that's because there were actually 0 trades that fit my plan this month. I took no trades, except I technically took one just to keep the account from going inactive. There were a few times this month where I set a pending order, but didn't quite get tagged in. There were a lot of trades that you could have taken. In fact, there was one quite big winning trade. In fact, it was a really big winning trade that I decided not to take. We'll talk about all of it in this video. You may think I'm crazy for taking 0 trades this month. I know some of the guys on the Fivers live stream think so, but I've actually saved the account from a ton of losses. And what I've done is I've gone through the charts behind me here and I've circled a bunch of trades that I could have taken. And at the end of this video, we'll see what our percentage could have been had I been open to taking a few more of the average or valid setups, in my opinion. Fivers is still the best prop firm in the industry right now. They've got the lowest spreads, the best prices, and the most reliable payouts. If you're interested in doing this prop firm challenge alongside me, I'll leave a link to Fivers down below. So without further ado, let's get into the charts. Hey guys, Floating Griff here. Ignore the fact that I'm slightly transparent, and we'll do some chart analysis up above me here. So starting off on AJ, and as I said, I've circled a few trades that you could have taken, just to kind of illustrate the point that taking every opportunity isn't always the right thing to do. And in this case, taking 0 trades can actually save you some percentage, or at least some drawdown. So you can see I've circled a flag here, which is actually a flag plus. It looks like the regular flag may have actually worked out. Besides that, this isn't really a trade that I'd be interested in taking. There's a few things wrong with it. There's a large wick. You can't reduce your risk on the entry candle. The prior price action isn't great. The impulse isn't great. There's a lot of reasons not to take this trade. This is going to be a common theme. There's another flag I've circled here. I remember when I first started trading, I was taking flags like this all the time. That's how you kind of have to get started to be able to find your edge. You start with this really simple concept, and over time it becomes complicated, and then it goes back to being simple again. And obviously this right now is a flag in its purest form, but it's a very ugly one because we're coming from range bound price action. We've got one impulsive candle, and then we're just back to range bound price action. Basically, we've got these big double wicks and 2 shifts in momentum. It's just not a very good trade. And this month, it's not been great for trades, I'll be honest. We have had a little bit more interest towards the end of the month, particularly on the USD pairs, so that'll be interesting to go over. You can see there's a reversal here. We're not really... There's not much of a channel, to be honest. Maybe you could say that we're going into a lower liquidity area with this descending. But ultimately, I decided against this trade just because there's a gap. Prior price action is not great. Requires an engulfing candle to the entry, I believe. And yeah, the 10 pip stop loss, if I put this on, you can see it's just absolutely tiny. So you don't really want to be involved in those markets. And just for the sake of illustration again, this is an awful continuation. And you can see it didn't work out, obviously. We're breaking above this large range, and we've retraced quite aggressively back to the entry. Yeah, not a good setup. I don't think there were any others I marked for AJ. So here's AU now with an interesting setup. There were actually a few trades which weren't just 1% losses that formed on AU, and a few that I actually kind of liked. For example, this trade here, which is a potential entry, and honestly looks great. We broke above this large liquidity area with a slowdown, and then we had this established trend down. So I was really expecting this move to continue. And had it not been NFP, I would have set my pending order here. It wouldn't have tagged you in, but yeah, you can see the NFP candle here, I believe. It's just not worth trading on this day generally, because you never know which direction the market is going to go. Here's another flag, which you probably don't want to take. I think this was the same time as the AJ flag I mentioned earlier, where you're basically ranging, you've got one impulsive candle, and then you've got a double wick, and then you're just going to continue moving correctively in this case. And yeah, AU this month was ascending basically the whole time, and I remember thinking, when are we going to get this reversal? This is going to be an amazing reversal. And we just kept descending and kept descending. The longer the ascending, the better. Generally, the reversals from a longer channel are more and more high probability. And quite often we retrace to the base of the channel, which would have been around here. So as this kept going and going and going, I was getting more and more excited because it made it more high probability. And it also means that we're more likely to kind of reach this point. But unfortunately, we didn't really get any clear reversal opportunities, which kind of sucked because I was monitoring this for the whole time for the Fivers challenge. There was a flag here, and this is actually not a bad flag. We had a medium impulse, I'd say. We are moving correctively. We know AU likes to move like this, but again, it's just not worth it. The impulse isn't big enough. We had an engulfing candle here, showing a shift in momentum. And again, as I mentioned, this price action is more ascending than kind of trending correctively. So I was actually kind of looking for shorts ultimately. So moving on, we keep ascending, and we ascend for so long that eventually we just go range bound and we start moving sideways. And we reach this trade, which is quite an interesting one. This is one of the few pending orders that I set this month, and it looked so promising. It's such a shame that it didn't tag me in. And this is basically just a descending into a liquidity area below this push up here. I'm looking for people's stops to be triggered, and it was a small descending, sorry, but smaller channels tend to work out pretty well on AU, provided you've got a really clear shift. And in this case, we also had the added benefit of going into a liquidity area, which really helped. And I was actually willing to set my order after this first candle, which broke the high. And I set my order right here, like this, with a 10 pip stop loss, I believe, something like that. And this order, this trade would have been so high probability for me that I actually, I think I actually left it on after the second breaking candle. I was willing to tolerate an engulfing to the entry just based on all the variables. It was pretty much a 10 out of 10 trade for me. So I was like, you know what? If we have an engulfing to the entry, it'll still be a 9 out of 10 trade, and that's worth taking, in my opinion. And unfortunately, we didn't get tagged in, but we did move to the other side of the range. So just a classic kind of sweep scenario. And then talking about sweeps, we actually had a sweep short, which I know a few people in Zentum took. If I mark this off here, you can see a really clean, I mean, it's pretty much perfect, 3-to-1 liquidity sweep. Obviously, the stop loss is quite small. Would prefer a bigger stop loss. But yeah, this is looking at the liquidity area above this kind of double top area, this larger range. And we sweeped it so clearly, so obviously with a huge wick. We had a super clean rejection candle. But as I've said, I'm not really trading sweeps at the moment, but I'm still monitoring them. I'm still watching them. And I thought I'd mention that just because it's probably the cleanest sweep I've seen all year. That was a really, really nice entry. So that's it for AU. Again, we had a little bit of excitement and nearly had a trade over here. But in the end, I didn't get tagged in. So yeah, we'll look at EJ next. So EJ doesn't really require too much analysis because it has been so range bound. And you can see this just as I go through it here. We've nearly been perfectly sideways. I haven't actually marked off a single trade on this currency pair, even the valid ones. I mean, maybe there's a flag here, but it just wasn't even worth marking because honestly, you could probably find like multiple trades a week if you look carefully enough. I mean, I'm sure there's a flag in here if you considered this an impulse. But yeah, I've not been too liberal, just marking off every trade. Yeah, EJ was really bad this month. So there's not really a lot to discuss. So we'll just go straight over to the EU now. We'll go back. Let's see, early April. So yeah, we did have this move up towards the beginning of April, but unfortunately it didn't lead to anything. We just had a huge wick, and then we just came back into this range. But then, out of nowhere, we had another big impulse up, which then led to another range. Unfortunately, we're just not getting any opportunities to enter into these trends with a continuation. But that's just the way it is sometimes. You're not always going to get a perfect entry. And I'm just waiting patiently, ready to pounce, waiting for that 10 out of 10 setup, because I'm not going to waste my money on subpar trades, you know. You might, I know there might be a few people that feel at the moment like changing strategy or just completely trading new entries, and I get that, but I don't think a lack of trades is a good reason to do that, because the drawdown is pretty minimal, to be honest. The drawdown isn't anything crazy if you're risking a regular 1%. I was looking back at my 2024 trades recently, and the largest drawdown in my backtesting was actually like 6%, and in my live trading it was like 12%. So there's actually a lot of there's a lot of room for improvement there, you know. I think it's easy to blame the strategy when it's actually not the strategy's fault. But I get if you want to have higher trade frequency, and I can definitely understand that. But talking about not taking trades, this was a reversal opportunity here on AU, which if you took it with, I think this was with a 10 pip, no, I think it was even with a 12 pip stop loss, you actually would have made an 18% profit, which is crazy and actually outweighs all of the losses I've circled. So there is room for taking every trade. There's definitely some terrible flags that have played out alongside this, you know, decent reversal. I wouldn't say it's a bad trade, to be honest. I'm gonna delete this circle so we can see it more clearly. The idea here is that we've broken into this larger liquidity area, we've broken above a range, and we're breaking and retracing these highs, and then this is the shift in momentum, these two candles. Now, why did I decide against this? And to be honest, I was looking back, and it's pretty much just this one candle that stopped me from taking this trade, and that's because there was just too much buying pressure in this candle, and so much so that this bearish move didn't look like strong enough to me. It didn't show enough of a shift in momentum. It didn't show me enough conviction that price had truly reversed. So I ended up sitting this one out, and I remember looking at it, and I remember thinking about it, and I was like, no, it's just not high probability enough for me. And to be honest, even take away this high over here and just focusing on this price action in this leg up, it's actually quite bullish. We've got strong impulsive leg, and in the pullback candles, I'm not seeing any shift. No shift here, no shift here. Then we have more strength, no shift here. So this is the only indication that price wants to reverse. Yeah, I would say that this is not a perfect trade. I'd maybe give it like a 7, maybe barely an 8. But as you guys know, I'm just sticking to the 9 out of 10 and 10 out of 10 trades. And you know, it sucks because this trade did end up going on to make 18%. You would have held it for, I think literally like nearly 10 days, because you would have held it through to May. I'll skip forward a few candles here so you can see just where you would have been taken out, which is over here. But yeah, this is a huge trade. But I don't have any FOMO from it because it doesn't fit my plan. So it's quite easy. It's quite easy to move past this one. But yeah, that is the one trade which could have made a big difference. But if I were to take this one, I'd also have to take a bunch of the more average trades, which I've already circled, because this just simply doesn't fit my plan. Let's talking about those average trades. Let's take a look at some of the other trades that you could have taken here on GU. If I recall, is there anything over here? Nope. So there was this continuation, which actually looked pretty decent. This is not too bad. Similar to the EU reversal in many ways, where maybe it's a 7, maybe it's an 8 out of 10 trade, but it's not perfect. It's not good enough. It's not 9 out of 10. Like, there's more than one thing wrong with this trade, because obviously you don't want to look for too much perfection in the markets. So what am I seeing here? Well, we broke above this high and we immediately retraced, and then we've got these double wicks which show price struggling to break higher, and then we've got quite a strong retrace to the entry here. So there's a few reasons not to take this continuation there, and it would have taken you out before trickling higher in this corrective manner. And then there's another trade here. I should circle it a bit differently. It's right there. And this continuation is actually nearly perfect. This is a trade that I would take, and there's only one reason that I didn't take it, and that is because it formed on a Monday before London Open. And it's in my plan not to take trades before 8 a.m. on a Monday, which is before London Open on a Monday, because quite often you'll see price range around, and it can do some crazy things and it can take you out. And in this case, it would have taken you out by the looks of it. It would have moved up a little bit. You wouldn't have had the chance to reduce your risk, and then it would have taken you out there for a 1% loss. So in this case, it actually saved me. My plan has saved me again from another 1% loss. Yeah, this trade is really beautiful otherwise, because we've got this big push up. We've got a really nice pullback candle with a nice piece of wick there. And then this breaking candle, although it's quite small, we've got a good tolerance, a higher tolerance for those on GU. But yeah, really nice impulsive move there, and my plan saved me. So what else have we got? We've got this flag here on GU, which again, not a trade that I would take. My plan kept me out. The flag setup itself is really nice. It's quite a tight flag formation, but the impulse is clearly just not enough for GU. So we won't talk about that one too much. NJ, I think NJ was fairly similar to EJ, where there just wasn't really a lot going down. Again, there's some flag setups here that you could have taken. I haven't marked off all of them because you'd be down like 30-40%, I think. But yeah, there's nothing happening on NJ either. So yeah, that's it for the trade review. As you can see, I've definitely remained patient. There are a few trades I could have taken. There were one or two trades where I was nearly tagged in, I think, just one actually on AU. And there was that big trade on EU, which I decided not to take. But again, my plan filters out all these setups. My drawdown for this month is 0%. My profit for this month is 0%. Otherwise, if I would be taking all these trades, it would be messy. I would just have setups all over the place, and my equity curve would be looking like this. And I think it is literally mostly losses. I mean, if you're going to start taking more 7 out of 10, 8 out of 10 setups just to get in that big EU win, I mean, your win rate's not going to look great. Your equity curve isn't going to look very smooth, you know. I think there's literally like 10, 20, 30 losses and maybe 2 or 3 winning trades, and that one big winning trade is just not worth doing, in my opinion. So just before doing a dashboard analysis, I forgot to mention that there were 9 losses that I'd circled, and that is just the tip of the iceberg. There were a lot of other trades I could have circled. I just really didn't want to bore you with all of them. But of course, there was the EU trade as well, which would have made 18%. So ultimately, you could say that I missed out on 9% profit by not taking all those trades. But as I've said throughout this video, do you really want to have a 10% win rate and a really unstable, choppy equity curve just for the sake of, you know, getting that lucky EU reversal? Because it does feel like that. I don't really feel like there's much of an edge there. There were so many trades this month that would have lost, and there's no way you can take all of them and just hope for a big winning trade to save you. That's a really stressful way to trade, and it's not a way that investors or prop firms would want you to trade either. So I'm very pleased with my position, taking 0 trades this month, making 0 drawdown and 0 profit. So yeah, here we are in the dashboard now. Unfortunately, there's not a huge difference from last month's review because we've just made 19 cents here, as you can see. And there's a preview for next month as well, because I took another trade a couple days ago just to cover the inactivity days. So yeah, plans for next month: keep doing what we're doing. Stay vigilant, because you know we could have 1 or 2 huge winning trades that can make all the difference. So we really have to be careful that we don't miss those setups when they do come along.
So I'm going to be really vigilant, really careful, because I would hate to come on here and say, guys, I'm really sorry, there was an amazing flag and I missed it. But yeah, there we go. I hope you found this video insightful. Let me know if you have any questions about any of those trades I've just gone over, and thank you for tuning in. If you're new to the channel, remember to subscribe, comment with this emoji to show me that you made it to the end, leave a like, and I'll see you next month, everyone. Thank you very much.